Bonjour, je m'appelle Claire Laffut, j'ai 23 ans. J'habite à Paris, je suis belge. Qu'est-ce que je dois faire?
Une envie partagée, encore peut-être inavouée, peut-être encore jamais dévoilée. Je l'ai vu à la télé. Si je mange vers un enfer, faut t'avouer et ta moitié pardonner. Et on en reparlera si tu dis la vérité. Et j'ai pas le temps me laisser envahir par tous les faux sourires. Et j'ai pas le temps me laisser envahir par tous les faux sourires. Et j'ai tout quitté afin de te trouver. Je t'ai trouvé dans la foi, au fond d'enfui là au moi. Et j'ai tout quitté afin de te trouver. Je t'ai trouvé dans la foi, au fond d'enfui là au moi. Si je mange, je vais m'en faire. 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 À quoi tu penses dans mon absence? J'ai un parfum d'espérance au fond de moi. Au fond de moi. Y'a comme un manque de cohérence dans ce malheureux silence au fond de toi. Au fond de toi. Et j'ai pas le temps me laisser envahir par tous les faux sourires. Et j'ai pas le temps me laisser envahir par tous les faux sourires. Et j'ai tout quitté afin de te trouver. Je t'ai trouvé dans la foi, au fond d'enfui là au moi. Et j'ai tout quitté afin de te trouver. Je t'ai trouvé dans la foi, au fond d'enfui là au moi. Si je mange, je vais m'en faire. Si je mange, je vais m'en faire. Si je mange, je vais m'en faire. Si je mange, je vais m'en faire.
All right, guys, what is going on? What is good? What is good? Hopefully you guys had a good weekend. Who do we got here today? A little bit more than Friday already, which is to be expected. But if you're not here on Friday, if you missed it, you missed some easy money, man. You missed some easy shmoney. Only a couple days into the new year, man. It's not a good look, chat. It's not a good look. Anyway, was good. Roberto, Eric, Jorks 2020, Monkey, Convicted Capitalist, Sean, Kieran, Slowly, Shampoo, Marshall. Who else is here? Who else? Big James in the house. Big James. Cool. Cool as a cucumber. Cool as a cucumber. So, I don't have a lot for price action today. I don't really care for what we've done here. I like Friday a lot better than today. And I don't have any expectations for today. Not bullish. I'm not bearish. Not anything. Let me ask you guys this. This is day 5 of the new year. How far along are you in the book? How far are you along in our book for January? How to read a book? If there are 330 pages roughly, and we are day 5 of 31. I can't do math, chat, but how many pages are you in? At 10 pages a day, you should be roughly 50 pages in. Roughly. Right? Give or take. Plus or minus. Cameron's at page 31. Sean started chapter 3 today. Eric's on page 66. Need to go back through and take notes before I read any more, though, which I'll do after the stream. Then read the next chapter. What did you say you started? You started chapter 4? Chapter 4. Oh yeah, inspectional reading. That's right. No, so chapter 5 is really where it gets fun. Chapter 5 is where it really becomes how to actually read a book. So chapter 5 is where you learn about underlining and highlighting and asterisks and brackets and like actually marking up the book. So I guess it would be wise to read chapter 5 and then go back to the beginning and start over. That's not a bad idea. Because now you know, if you've never done it before, now you know, okay, I should circle certain words or underline certain things or bracket certain paragraphs or asterisk over here or however you want it. I mean, it's your book, right? You make it yours. You do whatever you want, whatever color pen you want. I don't recommend pencil, but that's how you learn how to make it yours, is chapter 5. So it's not a bad idea. Justin said page 53. What's good, Julius? Simon's on page 120. Oh, man. Somebody's ahead of the curve. Look at that. Page 120. Oh, yeah, you're almost where I am. But I started way ahead of you guys. So that wouldn't be fair. That would not be fair. What's good, Oscar? All right, anyway. What do you remember about Friday? what do you remember about Friday? Friday was a members only stream, so we didn't have 40 people on like we do now, but we did talk about a few things. That might sound a little bit sick. I don't think I am, but I don't know. Suffering from success, DJ Khaled. I don't know. We'll figure it out later, but what was Friday all about? I know we went in depth. We did an outline on how to read a book. I did end up clipping that, and then the clip, I don't know, I didn't really see it necessary to upload it, so I just kept the stream up there. It was only going to be shorter by a few minutes anyway, so. But I gave you that calendar, give you that outline, and I also told you when I would be releasing the companion essay for this book too. And I may not have time to find it because I did not put it somewhere where I would remember. Oh, here it is. Here it is. Remember that calendar I gave you? So if you're not a member and you weren't there, but at least you want to follow along with Book of the Month, because that is a public thing, the companion essay will not be, and the book discussion will not be. But this is a very simple outline to follow along. Part 1 through 5. Chapter 1 through 5, sorry. Chapters 6 through 12. Chapter 13 to 19. And the last 2 chapters. So if you don't have that, there you go. You're welcome. Was good, Patch. Justin said, how would you do the referring of past pages? I find it a bit hard to understand when it makes sense to refer to past pages. I feel like you could almost do that on every page. To be honest, I'm not even sure what you're trying to ask me right now. What do you mean referring to previous like past page? What are you talking about? I don't understand. Friday, it wasn't a very long stream. We didn't talk a lot about analysis, but I at least gave you 2 different things. Actually a couple different things. Well, 2 different upside targets, but I give you a downside target first. So I talked about how this, even though it is a 1 minute time frame, still equal highs. And then we also talked about these lows down here. Oh, I opened the wrong shit. There we go. We talked about these highs. I talked about this low specifically. And then I also talked about this gap up here. Remember that? 446. Sure did, chat. Sure did. Look at that. We talked about coming down to those lows to try and get out anybody who is trying to catch the low of day. And then I said in the final hour, so I didn't time it correctly. That wasn't really the goal, but I said maybe in the final hour they would run it higher above these highs and into that gap. So we did get above those highs and into that gap, but we did it at 135, and we did not. I mean, we did do it again in the final hour, but we had already done that prior to the final hour, which is nice. So if you bought below those lows, If you bought the inversion, if you bought any sort of anything at or near below that low, right? Immediately to where we wanted it to go, right? Predicting the unpredictable, not reacting, predicting. That means beforehand. That means future telling. That means fucking wizardry. Okay? That's what that means. We expected the low to get taken, and then after that we would run to these highs and above that, right? So look what set the low, or run below the low, and prior to the final hour, okay? Look what the high was on Friday's PM session, right? So how does a person, because anybody can do this, okay? That's what I firmly believe. How can a person tell you where it's going to go before it gets there, right? Not just like a directional bias. I give that out more than anything else. I'm bullish, I'm bearish, or I don't fucking know, or I don't have a bias, right? But in certain cases, we expect multiple things in advance, okay? Anticipation, predictability. They say it's not predictable because they can't fucking predict it, but you can, right? What are the tools that we use here? Still no indicators on my fucking chart, folks. Nope. Still no volume on the downside and no volume on the right side either. Nothing. There's nothing here. But you know what is here? The same shit we talk about all the time. The market, right? What sets a low or a high? How do we know if the low is set? How do we know if the high is set? With high probability, because we won't always get it right. Okay, I always have to throw that in there. Because sometimes people are like, oh, he's being an asshole again. And John's back on his bullshit again. I don't always get it right either. But remember, it's probabilities. We're stacking probabilities. We're not expecting perfection. We're not anticipating 100% strike rate. What we're waiting for is, hey, the probabilities are really stacked, and it's worth either putting money on or putting some sort of risk on. What sets the low, chat? Come on. It starts with an M. What is it? What always sets the low, or what always sets the high? It cannot not be this way. You know this. You know this, chat. Day 5, don't be playing no fucking games, chat. We're not doing that. We are taking 2026 seriously. Well, at least we should be. I can't say that for everybody. Success ain't for everybody. Happiness ain't for everybody. Trading ain't for everybody. But I'm going to do my best. I know, Cameron. Chat still sleeps fucking 12:20. Why are we still sleeping? I don't get a pass. Why do y'all get one? If we have a buy model, sell model is the same thing. Manipulation always sets the low. Okay? It always sets the low. No matter what the indicators say, no matter what depth of market and all this, I don't know, gobbledygook, no matter what any of that stuff says, we don't look at that. And yet we're still seeing things pan out. Right. Because it follows the script. Price action follows the script that it's been coded to follow. The same way that your phone, you set an alarm for 30 minutes, is going to beep in 30 minutes. Because it's coded to do that. The markets are the same way. Now, where you'll get it wrong is if you interpret something wrong, or if there's manual manipulation. That I cannot, that I can't really predict ahead of time, because I'm not the one who actually folds price. That's not me. But if you remember from Friday, and again, this is all in the recordings. I mean, you can watch it literally. I told you, I said, what was it? If it was me, if I was the one controlling this market, what would I do? And I told you I would run it lower to get people out that are trying to long, and then I would run it above those highs and into that gap. Why? Number one, because that's the script, folks. If you've seen the movie before and you watch it a second time, it ain't going to be any different from the first. If you watch it a fifth time, it ain't going to be any different from the other 4 times you watched the movie. It's the same script. You know the lines. You literally know the lines, right? We know the lines, folks. They're going to run it, or price will be ran below an old low if we're anticipating a run above some highs. Okay? It usually doesn't just stop shy of that old low. We know what that is. We call that an engineered low. At least I do. Can't speak for everybody. But we anticipate, there's that word again. We're not reacting. We're not reacting. We are predicting sweep below the low, shift in the state of delivery somewhere. Then we'll get our low risk buy, accumulation, reaccumulation, and then a second leg or a second stage higher above the old highs, not just to the highs. You can TP at old highs. There's nothing wrong with that. But you're going to be missing out on some. Right? Because again, if this, it's not a great original consolidation because it's only like 4 minutes, but it's fine. Those highs, right? I keep drilling this into your head. Right? How far can price go below a low? How far can price go above a high? Answer's always been the same. Hasn't changed. The very specific answer, if I was writing a textbook on it, which I'm not doing, but if I did, it would be the next available imbalance. A gap is not an imbalance, but it's an inefficient market. So technically, it would be the next available inefficiency. In this case, we have this big 1 minute imbalance, and then that gap is included. So we don't expect it to just hit 427. We would expect it at a minimum to hit 446. Literally. It's that easy. It's that easy. Right? So what did we do? Again, you already know this because it's Monday and this was Friday. But original consolidation, right? We had ran lower, back into the consolidation, traded lower again. So we left those highs open, right? So guess what? I'm not going to short down to those lows, like probably in here. I feel like that's a little playing on the train tracks, if you will. But remember, that's how we know. How do I know if lows are going to be left open? How do I know if highs are going to be left open? Again, I don't always know. I'm not perfect. Okay? I wish I was, but that's not the case. You can easily see, hey, that's a consolidation. We left it. We came back into it, couldn't get above it, and left it again. So when we leave it again, that's how we know, okay, these highs are going to be left open. These highs are going to be left open. That gap's going to be left open for now. So price gets rolled back, cleans up some inefficiency here, dilly-dallies a little bit, and then, right, 1248, we trade lower, 1249, we trade lower, 1250, and 1250 is our low here, right? Random fucking time again. Random fucking time. Magically, these little 20-minute windows just keep setting highs and lows. But yet, macros don't exist, right? It's fucking crazy. Crazy shit. Absolutely crazy shit. Right? Bang. There's your reversal macro. We trade higher. This is obviously a premium. Premium as it relates to a measurement from those highs to the low. Okay, 50% is right there. We trade through it. We get our 75 level here. So now we're in a deep premium here. This comes back into an imbalance here, rallies, and then right there at 128, right? None of you asked me this, so I'm going to answer questions you don't even ask. How do I know, right? How can I possibly record for Instagram when my trade is fixing to hit TP? Well, number one, I don't always get it right. Instagram stories are 60 seconds. Sometimes it takes me 2 or 3 minutes to get it right. Okay. But how do I know, okay, TP is coming? Let me ask you this, chat. Whenever you're in a trade and it's going your direction and it's going towards your TP, it's going way away from your stop loss. It's running from your stop loss. It's running towards your TP. And you're like, okay, this is a good trade. I'm in a good trade. This is awesome. This is nice. Feel like I know what I'm doing now. I'm going to drop a like on John's stream because he's fucking awesome. I appreciate it. Cool. But I don't know exactly when price is supposed to hit my TP. I don't know when. It could be in the next 5 minutes. It could be in the next couple hours. I really just don't know. Does that drop a 1 if that ever happens to you? I don't know if it's going to hit my TP or not. Uh-oh, we're getting drawdown. We're getting a little pullback here. Oh shit, maybe I'm wrong. What do you mean? What do you mean you might be wrong, bro? If you're in from down here and it's like 90% of the way or about 80% of the way to your TP and you start seeing like, okay, it's 20 points in the opposing direction. Don't shit yourself, Chad. It ain't like that. You're not wrong. Well, listen, I don't always know either, but you know what I do know? You know what I do know, though? What I do know is the loss. Hell, I'm the one who made the fucking presentation. The law of the return. What is the law of the return? The law of return, okay? Now, to be fair, the law does state that you have to use the consecutive candles, which in this case, that's a fat range. If we were to just mark this one here, right, which was clearly used as distribution, we know from the law of the return. What is the law of the return? The law of the return, baby. God will not be mocked. A man reaps what he sows. Okay? You reap what you sow. That's a life lesson for you. We all know this. Some people call it karma. Some people call it, I don't know, whatever. But we're on the same page, right? This idea that what you give is what you get. It's fairly simple. In price action, okay, what was once bearish, okay, what does it become? Oh, bullish. Jesus. Amen. So when we see price retracing, you don't go, oh, what if I'm wrong? It's going to come all the way back to my stop loss. Okay. First of all, you have PTSD, clearly. It's okay. We've all been there. All right. It's what happens sometimes. It's all right. But number two, you know, markets don't move in a straight line. Price doesn't move in a straight line. Okay. There are going to be fluctuations. Why is that? Well, it's definitely not supply and demand. Okay. It is price delivery. It is if I'm using this word correctly, it is a continuum. And it's not a word to just try to make me sound fancy. No. The order flow is probably a better word, honestly. I probably should just stick to that instead of trying to bedazzle you with some razzle dazzling. I know you guys like the razzle dazzle, but I can't always do it for you. Let me do one more thing real quick. What I mean by excuse me, what I mean by continuum or order flow, okay? I want you to look at every single turning point here. Maybe not every single one, but at least the ones I've highlighted for you. Okay? What is this right here? 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 And what is this right here? And that right there. Okay? What do you think those are? Price is sensitive to these things. Okay? The way that some people are sensitive to when I post my car, thinking that people don't care. I had to bring it up. I'm gonna post my car whether you like it or not. I don't give a fuck. It's my social media. The same way I cuss. If I want to cuss, I'm gonna cuss. I really don't care. I am personally trying to dial it back because, you know, discipline, but I'm gonna do what I want to do, period. Yeah, Mason, it's definitely not Elliott Wave. It's definitely not that. Shift in the state of delivery. Right? Technically, this would be the low risk buy. This would sort of act like a low risk buy, but this is really more so like the first stage accumulation. I know I'm kind of zoomed out a little bit, so I'll zoom in just to make sure that we can all see this. That's the last imbalance on the run lower that got traded through. And then all of a sudden, randomly it gets respected, right? Randomly gets respected, and the halfway point's being respected too. Look at the body closes. Look at the fucking body closes. Okay? That one right there closes above halfway. That one right there reaches a little bit lower and then closes above the halfway point. That's crazy. But not unheard of. You see this all the time. I don't even know why people are fucking surprised anymore. We crossed 50% right there at 107. And then guess what? 108, 50%. Well, what is that, John? If you are bullish, 50% is a discount. Look at that right there. I've given you rules. I've given you ideas. Price is still following them. Scary shit. Right there. 50% is a discount. We go higher. Retracement into this lower imbalance here. That gap is included here. Okay. This imbalance, but I'm including that small gap within that. That's what we do. Not everybody does, but if you don't want to be retarded, okay, political correctness aside, we take the imbalance. If there is a gap, we use that. We include both. Okay? Price randomly comes back, right? We had too much buy side. I use too much because it's just, I'm being facetious. There's also a suspension block here too, but this lower imbalance with that gap, okay, price is respecting that. No matter what indicators say, price is still going to do that. Then we finally get outside the parameters of that old level of distribution. See that? This up candle here, body's respecting it here and here to go lower. So what was once bearish, what was once utilized for lower pricing, will thus be then used for higher pricing. Okay, gap right there. There's a gap there too, but it would have been ideal if this had a wick right there. Okay, look at that. Look at that. Price stabbing into that bodies. Look at where all the bodies are. Price is dipping into it, but all the bodies are still respecting that purple line. So coming back to my point, how do I know when price is getting ready to hit TP? How do I know when to hop on Instagram and flex a little bit? Hey, look, watch this TP. Right? I know you guys like that shit. That's why. Because it quite literally is following what it's supposed to follow. And guess what? You knew that. You knew that before the stream was even over, that we would go below the low and then probably go above those highs. You knew that before the stream was even over. Friday alone in that 15-20 minute window when we talked about price and seeing it do exactly that should give you all the confidence in the world to trade with a naked chart. Why wouldn't it? There was no tools, no measurements, no nothing. Literally nothing. No robots. Nothing. Nothing. Other than just time, which I didn't time correctly. I'm sorry TP hit before it was supposed to. That's a bad fucking thing, right? Price, which we talked about to some extent, and the context. That was the biggest thing. Okay, price is price. Context is why. Why should price go below the low? I told you. For manipulation. Price will not make a low without it. I mean, it could, but price is probably going to come back for that to sweep it later. So, I mean, I'm not going to say it can't, but usually you don't want to long until manipulation. And then right after that's going to be your greatest RR, your greatest low risk, high reward trades. Anything else after that is going to be a high probability trade or a high probability add-on because you're trading in the direction of opposing liquidity. You know that too. All the sayings that you've been given over the years, trade in the direction of opposing liquidity. Last imbalance in a reversal, or the first imbalance in a reversal is typically a breakaway. The last imbalance on the way to liquidity run becomes an inversion, right? That's like part of the Judas model. In this case, you don't really have like a 1-2-3 formation, but it's still cleaning out lows with leaving highs. That's ideal bullish. That's ideal buying on the way lower. That's buying on the way down. Well, hold on, John. Where's my stop loss supposed to be then? You always tell us to wait for the low to be set. Yes, that's ideal. Because the risk, point-wise, is framed once the low is set. It's framed a lot smaller here than it would be to like buy this on the way down. Can you do that? Yes. Where does the stop go on that? It's probably, again, you don't even know what questions to ask. And I'm not trying to talk shit. It's just you don't. I didn't know either. Okay. Well, John, if I am going to buy below an old low, where does my stop go? is what you're supposed to ask. I'm glad you asked, chat. If you're going to buy below that old low, if you wanted to be, I guess, I can't say safe. That's not the word to use. But if you want a high probability of not being stopped out, it would go to the low of this. Or if you wanted a little bit of a smaller stop, it could go to right there. Okay. That's why that gray box is still on here. What is that gray box? Nobody asked. Sorry, I'm having a lot of fun today. Listen, it was a beautiful day yesterday. It's probably going to be a beautiful day today too. I'm excited. I literally took the car's roof off. I got to do that again today if weather permits. It's 75. Oh man, we're gonna have to hurry up. Y'all listen too slow. So this regular trading hours gap, you see that? You see that? Look at it. Friday the 19th open is the high end. Thursday the 18th close is the low end. You see that? What is one of the rules that we look for when it comes to gaps, when it comes to imbalances? What's one of the things that we look for? If we are bullish, because again, Friday was a bullish scenario. If we are bullish, the concepts that we are looking at should not trade or close in the bottom half. Remember? This should not be new to you unless you're new to my channel. So the halfway point is right there. TradingView finally coded that into their box. I asked them to do that years ago and they told me to fuck off. So I said, okay, that's fine. But this is the lower half. We can trade to the halfway point, but we should remember, if we are bullish, that's the key. If we are bullish, then we should leave most of this open. So that's why I said, where does the stop go? If you're buying below old lows, right? Where does the stop go? It has to be tailored. Well, again, this is my opinion because anybody can agree to disagree, and that's fine. But a lot of people will tell you they don't know how to buy below old lows, and I'm telling you how. Okay? The risk then is framed based on something on a higher time frame, which in this case would be that gap. So you don't have to draw a box on here, but I'm trying to give you a visual here. If this should be left open, or the majority of it should be left open, that's exactly why I just gave you the two different ideas that I just gave you. This one, right? This stop loss, it seems weird. It's like, well, 248. Well, what the fuck is that? That's because it is halfway of the halfway. See that? If the bottom half should be left open, then the midpoint of the bottom half shouldn't be traded too. It can be, and it will be. You'll see that. You'll see gaps close in, or it says I'm offline. Are y'all still here? Drop some twos in the chat if y'all are still here. I'm gonna have to call my internet company today, cuss somebody out. That was weird, wasn't it? This is fucking bullshit, dude. Okay. Man, I really don't want to restart what I just got into. Chad, are we on the same page here? If price is going to leave the bottom half open, then our stop can go somewhere in that bottom half. Okay? Now, again, you don't have to do that. You don't always have to do that. Because let's say we did buy below the old low with a stop here. That's about 58, 68. That's about 30 points, right? That's about a 30-point stop. Now, if you instead waited for the low to be set, then waited for a shift in the state of delivery, you have a couple, but at least for this imbalance here, then it could have went to that inversion, and a 30-point stop would be down here, which would be okay. Or you could tighten that a little bit. I'll zoom in. I know we're getting colorful here. I'm just trying to clean this up. Then it could go to the low end of the first one here, because that first one, the first imbalance and reversal, usually is a breakaway. So our stop can go to the low end of that. We would have obviously taken drawdown, but drawdown is not a dirty word. Our gap up here at 146, which is what I gave you. 446 right there. That's a 1 to 4.6. Not bad. And the stop, I think, is a little less than 30 points. So that's actually framed point-wise tighter or smaller than buying below the old low. But again, it's up to you. It can be scary buying below old lows because none of this has formed yet, right? None of that has formed yet. And what you're looking at is this. And you're going, okay, yeah, I'll buy that. Most of you don't. Most of you won't do that. And that's okay. I generally don't either. 95 times out of 100, I'm not going to do that either. But in this case, we were expecting a reversal. And if you saw that gap on a higher time frame, and you know that manipulation sets the low, then the risk is worth it. What happens if there is no gap or regular trading hours? Can we still long below an old low? I mean, I'm not going to say you can't, but if you cannot tailor a stop loss to something on a higher time frame, then I probably wouldn't, Robert. Now, here's the thing. There will be times when you can frame that stop loss based on something on the higher time frame. But remember, the higher time frame you go, the larger these ranges are. So you might have a smaller time frame target, and if you have a higher time frame stop loss, your RR is going to be cooked bigly. And that's not good. That's not good. So, and again, this is why I usually tell you it's, for most people, it's better to wait for the low to be set and then get in on a retracement or an add-on later. So, because this is a reversal, everything in here is like a continuation. If that makes sense. Reversal, continuation, retracement, right? Expansion, retracement, expansion, retracement, expansion. That's not a reversal. That's not a reversal. We're usually not going to get a reversal prior to equal highs like that. We can in this case because that's part of the model. That's part of the coding. Consolidation, distribution, redistribution, manipulation, low risk buy, first leg, second leg. That's why you have to know the stages. You have to know the stages. Your roadmap, if you, I'm going to just delete everything here in closing. your roadmap, okay, is just, we'll do a curve. That's what it is, right? Your roadmap is a curve. It's sell side of the curve, buy side of the curve. This is where price is going. It's going to those highs, right? But your stages, okay, this, matter of fact, the framework, right? That's just your highway. Okay, highways will take you far. Okay, you can be on the same highway for like 6 hours, 12 hours, or some shit. They'll take you across multiple states because that's how highways work. They're really, really long roads that connect the states together. Speaking about the US, okay? Your individual stages are kind of like your exits or your towns. So you kind of get a better feel for where you're at. You know what I'm saying? Because if you're on the highway and you don't know which stage you're in, you don't know like which exit to take or which town you're close to, then you're not going to know what to expect. Why would I expect a continuation here? Why would I start anticipating that my TP is fixing to get hit? For the same reasons I just told you. We already, the other stages have already panned out. We already got manipulation. We already got the low risk buy. We already got the first leg. We're in the second leg. And we are just now trading into the law of the return. So what was once bearish should be bullish. So as soon as we start getting expansion candles towards those equal highs, well then guess what? TP's gonna fucking hit. Then you know. That's when I go, okay, I'm gonna pull out my phone. All right, Instagram family, what's going on? Look at 426. Can we get it? Can we get, bang. That's how I do that. Look at that. I'm giving you all my fucking secrets, Shay. Look at that. How to be a mentor 101, I guess. But look at that. That's how I do that. Because the stages are in order. It will never not be out of order. It won't be out of order. Manipulation. Low risk buy. First leg, second leg. You can't get the second leg without the first. You can't get the first without the low risk. Can't get low risk without manipulation. Can't get manipulation without something to manipulate. Can't get something to manipulate without something to manipulate later. It forms every time. Every time. It forms the same. Now, the time frames might be different. The lengths of consolidation might be different. The price levels might be different. Day of the week might be different. The timing during the day might be different. It's not going to be cookie cutter, okay? It ain't going to be like that. But it will be, I'll say, close enough. It will be close enough to this. Okay? You're still going to get consolidation. Sometimes we don't see redistribution. Sometimes we just see one level of distribution. Why is it that way? I don't know. I don't know everything. I wish I did, but I do not. Sometimes we get three. We get a distribution, a redistribution, and then another redistribution. What do you do with that? I don't know. Okay? Why does it do that? I don't know. But majority of the time, it will follow this. Okay? Again, not perfect. It's not perfection, but this works really, really well. And that's why I've taught it to you for a long time. And that's why I use it. And that's why I'm able to call multiple moves in advance for you. Because that's how markets work. So next time somebody asks you, what do you think moves price? That'd be a great conversation to have. So, because people still agree and disagree on what actually moves price. But as long as you can follow a system or a set of rules that allow you to be on side, low risk, high reward, high probability setups, you're good. Whether you use indicators or not. If you want to use indicators, go for it. Okay, so that's it. Regular trading hours versus equal electronic trading hours as indication of relative strength. Not necessarily. What I prefer, Robert, is when you have both regular trading hours and electronic hours agreeing with each other. Like, because remember, we in regular trading hours, we don't have electronic data. So what I'm saying is, if we have, let's say, let's say London's lows are equal lows and regular trading hours, AM session or equities open are equal lows. Well, now we have multiple downside targets. That's good to have. That's good to have. Now, when they're conflicting, like maybe regular trading hours has like this shit, like multiple stabs higher before going lower, but electronic has equal highs. That's a little bit more difficult because they're conflicting. So when they are aligned like that, like the way I just told you, that's usually good to go. And that's why I tell you to look at both. A lot of the times if you take a losing trade and you're only on one of them, you probably miss something on the other. You know what I mean? I can't really give an example here because I don't really know, I guess, like what people would have done, but I guess if you're looking at regular, okay, and you shorted, I don't know, let's say based off this gap or something. I mean, again, I don't know. I'm just trying to make some shit up here. If you like shorted based on a higher high, you know, into this regular trading hours gap fill, but then you got stopped out before the market went lower, you could go to electronic and, you know, maybe, I don't think this has it, but, you know, maybe there was an imbalance or something that you missed. And it's like, well, yeah, that's why you took an L. The market was reaching for data that you don't even know, that you aren't even aware of. You know what I mean? So you have to look at both. So with that, that will be our live session for today. That will conclude Market Maker Monday. So I don't really see today as a market maker model necessarily. I don't really care for this. If anything, ES was starting to look like one. But frameworks by themselves are not it. They have to be in alignment with the higher time frame. Here, I'll close it with this. If we go to the electronic, okay, you know that once we swapped over to the March, I don't remember if I don't remember if those were on the previous contract or not, but you know we have some equal highs up here at 123, 26,123. And when the market, right, sold off of that, traded lower, this was the low that has been set currently, right? So if that is our target and this is our low that has been set, what is this? That's 50%. Which means what? 50% and lower is discount, right? We'll just take it down here. That means this here is a discount. Right? So, what were we doing on Friday? What were we trying to do on Friday? Oh, market maker buy model inside of a higher time frame discount. Wow. Real life-changing stuff over here. I know. I know. What about this gap? What about that gap? Where's that at? That one I showed you earlier down here that we already discussed and talked about? Where's that at? Below 50%. That's also in a discount. Interesting. So anyway, we covered a lot today. Great questions in the chat. Great chat participation as well. So yeah, make sure to spend some time today reading so you do not get caught lacking. This is our book of the month for January 2026, How to Read a Book by Mortimer J. Adler and Charles Van Doren. It's not just about reading. A lot of people can read. Most people don't. Out of the ones who can read, they don't always know how to read well. A lot of us have read books and we couldn't even tell you what they were about. We may know the title and the author, but we couldn't even tell you some of the details of that book because we don't retain information. We live in a very distracted world. It is true. Neil Postman was right. Like 30 years ago. But this book will teach you how to read well, how to actually extract information, take notes, and stuff like that. So y'all be good, be blessed. We'll be here same time, same place tomorrow on January the 6th for another live stream right here on YouTube. And you're welcome, Slowly. I do it for you guys. I do it for the people. People over profit, baby. People over profit. See y'all tomorrow.